Hi everyone, today we will have a look at candlestick patterns, how we can recognize them with Python, and then we will code a trading bot. In this video we will cover two patterns. The first one is the hammer pattern, which is defined with a very long tail and short body, and then the second one would be the bullish and bearish engulfing pattern. So our plan by the end of the video is to code a trading bot in Python that is able to send trades to MT5 and that is able to recognize these patterns that we've mentioned. In our Jupyter notebook, we'll have a look at how we can find these candlestick patterns. So I've prepared imports, mainly MetaTrader 5, which is the connector to our MT5 platform, and I've also imported Plotly, which is our visualization library. So let's import that. And the second step is to connect to our MT5 platform to retrieve the OHLC data. So to connect to a platform, we need MT5.initialize, and also we will need our login credentials to our trading account to log in to this specific account. And then we will pass in the login password server to MT5.login, and that way we will be connected to a trading account. Once we are connected to our trading account, we can retrieve the OHLC data from MT5 by calling this function getOHLC, which takes a symbol, time frame, start date time, and end date time as the input, and it will output the OHLC data frame with time, open, high, low, close columns. The function that is used to retrieve the data is called MT5.copyRatesRange, which will retrieve the OHLC data from MT5. So to call this function, I have set the symbol to EURUSD, the time frame to MT5.timeframeM5, and the start date time is set to 1st of November 2023, and the end date time is set to 5th of November 2023. So let's call this function and see what we get. And as you can see, the output of this getOHLC function is the data frame that you see down here. Now that our OHLC data is ready, let's quickly visualize this data frame using Plotly graph objects. And with this cell here, we're able to visualize the candlestick data. So what you can see here, this is the Euro USD chart on the 5-minute time frame. And here, if we zoom in, we can see the individual candlesticks. Let's now define the hammer pattern to know what we're looking for. So a hammer pattern would be defined as a bullish candle which has the body in the 30% of the upper range, and the rest would be the long tail. For an inverse hammer, we would apply the inverse logic. So now that we've defined the hammer pattern, we can apply this logic into our Python function. So we've defined find hammer pattern, where we're putting in the candle as the input. So first, I created a variable called candle range, which takes the candle high minus candle low. For bullish hammer patterns, of course, we need to meet the first condition, that the candle close is above the candle open, and we've defined that the body of the bullish candle must be within the 30% of the upper range. And to represent that in code, it's basically taking the candle high minus candle open divided by the candle range. And if this value is less than 0.3, then it fulfills the conditions for a hammer pattern. I also have the same logic here for bearish candles. And so if both the bullish conditions are true, we are returning true for a function. Same for the bearish conditions, otherwise we return false. So now that we've created this function, we can now calculate the column hammer pattern for our data frame. And we do that by using the apply method and passing in the find hammer function. So let's run this. Let's run the cell. And to prove to you that this function works is we can visualize all these hammer patterns. So let's just see all the values where a hammer pattern is true and display it in our OHLC chart. So we've generated vertical lines where we can find our hammer patterns. And if you look at this is a hammer pattern. And you can also check here, which is also a hammer pattern, and so on. So everywhere you look, these are all hammer patterns. So now let's have a look at the engulfing pattern. So the rule for engulfing pattern is that for a bullish engulfing pattern to be valid, the body of the engulfing candle must exceed the high of the previous bearish candle. In order to analyze the engulfing pattern, I will also need the data of the previous candle. So I've extended the OHLC data frame with previous open, previous high, previous low, and previous close by shifting the open, high, low, close values by 1. And then to find the engulfing patterns, we can see the function here where I've stated the conditions. So for a bull candle, we want to make sure that the current candle is bullish, so a candle close must be greater than candle open. The second condition is that the candle must be engulfing, which means that the candle close must be greater than the previous candle high. And the last condition is that the previous candle for a bullish engulfing must be a bearish one. So the previous open must be greater than the previous close. We apply the same logic for the bearish candles but inverted. And also I've added an extra condition to add more significance to the engulfing pattern. And that is that the candle body of the engulfing candle must be at least 1.5 times greater than the range of the previous candle. So basically we will just want to have like a bigger engulfing candle. So if all these conditions are met, we'll return true, otherwise we'll return false. So we extend the OHLC data frame by the engulfing pattern, and here we are applying this function that we've created. So here we see that our engulfing pattern column has been created, and to visualize our engulfing patterns, we can also visualize them on our Plotly chart. So if we check our vertical lines, we will see, for example, the first bullish engulfing here. This one is probably a news candle, so maybe let's try to look at other examples. So here we have a bullish engulfing pattern, and let's also check more in the past. So in this case, this one would be a bearish engulfing pattern. Or we check here, we have a bearish engulfing here and a bearish engulfing here. I believe that we can actually skip this one because this looks more like a rollover gap, but that's again up to definition how we want to define the engulfing patterns. So our notebook is ready and we are now able to recognize these candlestick patterns. So now we are going to code a Python bot that is able to send trades from MT5. And in this video example, I will show you how to trade the engulfing patterns. So first we start with our imports, which is MT5, pandas, and time. And as maybe you've seen my other videos, and I'm using this market order function. And this function is able to send trades from Python to MT5 by specifying the symbol, volume, and order type. Next, we have our find engulfing pattern function, which we've created in our Jupyter notebook. And here you will find all the conditions that are required to recognize the engulfing pattern. And so for a bullish engulfing, if that condition is met, then I'm returning buy. And for a bearish condition, I'm returning sell. Also, I've created another function, which is called get engulfing signal. And this function is able to retrieve the OHLC data from MT5 for a past 2 candles. So whenever I'm calling this function, I'm checking if there is a signal to buy or sell at this point in time. And now we are coming to the main block of this bot. So again, we have to initialize a platform, log in to our trading account, and here I'm specifying the strategy parameters. So in this case, I will trade the EURUSD on the M1 time frame with a volume 0.01. I'm setting trading allowed to true, and while trading is allowed, I will run this loop. So to get my trading signal, I can call get engulfing signal, which is the function up here, and this function will tell me if any bullish or bearish candlestick pattern is present, and if there is, it basically tells me that I can either buy or sell. So if the signal is buy and Currently there are 0 positions open. I will send a market order to MT5 on EURUSD to open 0.01 lots buy. Otherwise, if the signals sell, then I will send a market order to sell. And if I place a trade, then I will set trading allowed to false. I will exit the loop and the script will stop running. So here's a simple example on how the script works. All you have to do is run the script in the PyCharm terminal, and once we find an engulfing pattern, you should be able to see a trade in the terminal. So this just happened, and we see that the script is working. This is it for a video. Thank you very much for watching. If you want to download my code, make sure to check descriptions, and I'll see you next time. Bye.